Earnings season is here with consumer, industrial goods, healthcare, telecoms leading the current period, just like what we had in the second quarter of the year. But do these numbers really mirror the state of the economy in the first 9 months of the year? Joining me to choose some of the latest releases is the head of research at Untitled Chapter, WALE OLUSI. It's good to see you. Good evening, my friend.
Good evening, Bosin. Pleasure to be here.
So thank you so much, WALE OLUSI, for coming through. Do you think these 3 months, 9 months earnings releases by consumer goods, industrial goods, do they reflect the state of the economy during the period under review?
Absolutely. I think it does. Because if you look across sector, there are a number of things that are, very, very revealing. For example, for the food processors, the agri companies, the manufacturing companies, we saw strong growth in their volumes. It looks like pent-up demand, is, driving that. There's also a price impact there. But for some other producers, the likes of Total, the likes of WAPCO, that low-yield environment that you mentioned earlier, 364-day bill doing less than 1% as of today, primary auction. Many of them are saving a lot of finance charges and is bringing them back to profitability. And we saw that clearly in the books of WAPCO and the likes of Total. And then if you look at the telcos, with COVID-19, with post-COVID activity, with a lot of people working from home, we saw a lot of, increase in data revenue. We saw a lot of increase in, even voice revenue, remained very strong, both for MTN and for Airtel. And for the financial services, we saw a lot of their profitability being supported by low cost of fund as well as non-interest income rather than interest income in the past. So I think these earnings actually reflect the realities in the economy.
Realities in the economy. So what about the consumer goods? For flour mills, for example, and NASCON allied, when you talk about sugar, pasta, whatever we're doing locally from agriculture to food, from farm to the table?
Well, I was part of flour mills' earnings call yesterday, and some of the revelation from that call indicated that what I mentioned earlier, the agro-allied businesses, the food processing businesses, were some of the biggest driver. About 50% of the driver of flour mills' performance came from the food business. By the way, flour mills' numbers for the second half of the year is the best they've done in the last 5 years. Feeds, fat and oil produce, these are some of the things that drove that performance. And what are we talking about here? Remember, sometimes last year, President Buhari ordered, a border closure. There's been a lot of policy that favors the agri sector. This actually supported not only flour mills, but even NASCON, because with border closure, that also means that even for flour, the amount or the size of smuggling coming in through the border towns have reduced, and Nigerians now have to deal with the local producers. Hence, that has been driving their volumes. So I think even for the consumer goods company, especially the food processors, the realities in the economy, the government policies, is actually supporting their numbers.
Let's look at the bellwethers in the brick and mortar of industrial goods like LAFARGE Africa. I'm sure you've taken one quick look at Boa Cement. This is as big as it can get. I'm looking at earnings, 158 kobo per share. I'm looking at revenue, 156 billion top line, far significantly, almost 40 billion naira, different from the same 9 months of last year. So from LAFARGE to Boa Cement, this is as big as this earnings can get from these cement companies.
Yes, Bosin, like I mentioned earlier, for the cement producers, one thing that we saw there is that it looks like a pent-up demand has spurred growth in Q3 specifically. Volume growth for both Boa and LAFARGE actually spiked, in Q3. We think there was a pent-up demand that came in the last 3 months up to the end of September after the economy was reopened. Also for LAFARGE, there's also, the impact of finance charges that reduced significantly and supporting their bottom line, their profitability numbers. So again, policies of government, the easing of lockdown measures after the coronavirus broke out, and the government ordered everyone home. A more how will I put it now? Opened economy in the third quarter of the year, allowed those who want to construct one thing or the other. There was, a little bit of increase in consumption of cement, in Nigeria. Hence, the growth we are seeing for the cement producer. I'm sure by the time Dansem drop his own numbers, sometimes next week, we should be seeing something similar as well, because Dansem is clearly the leader.
Cement shares is already up 2.12% today. The market is already sniffing around what is in a bag of Dangote cement. Finally, just about 1 minute, give us your deal drive a bit more on MTN earnings.
Okay, Boston, I think MTN earnings is one of the most, interesting.
Yes.
I think MTN's earning is one of the most interesting. There's a stable growth in voice, but data is, very, very rapid growth. One thing that is growing very, very rapidly there also is digital business. USSD, payment services, all of those kind of services spiked. Don't forget, BB Niger also aired during the period, and there's a lot of voting done via, USSD.
Now I get it. Now I get it. BB Niger and all of that. Whatever happens, money is going into someone's pocket. Folks were having fun. MTN is making money. Shareholders are happy. Investors are happy on the stock exchange. Thank you. Have a great evening and have a great holiday. WALE OLUSI from United Capital.